Now, when I say purchasing off the plan, I don't mean purchasing off the plan apartment. I'm talking about purchasing off the plan where you get a house and land. There's a lot of people out there that brings a lot of negativity to people that's looking to purchase an off the plan house and land, and also unregistered land. And there's a few people out there always say, you know what, buying new estates, buying unregistered land, you're paying a premium, you're paying overpriced stock, it's not worth the value of the money. When I talk to my clients about my properties, okay, I try to open up their minds a little bit more and say, you know what, you don't actually always have to buy existing properties, right? You can buy off the plan, let it sit in the next 2 years. Good day everyone, it's your host Tony Xia here, and thanks for joining me in another episode of the Mortgage Chat. And today I want to talk about purchasing unregistered land and purchasing off the plan. Now, when I say purchasing off the plan, I don't mean purchasing off the plan apartment. I'm talking about purchasing off the plan where you get a house and land, so in one contract. Okay, so don't get that mixed up. So normally, a lot of people would have heard of you purchase land, then you get another contract for the house, which is 2 contracts. But in this scenario, off the plan house and land. So what I mean by off the plan one contract is I'll get a contract that includes the land and the building contract all in one. I'll pay the deposit and I don't pay the remainder until the land and the building has completed and ready to settle and handover. And why do I want to talk about this today? Well, because a lot of people out there, investors, buyers agents, don't give these sort of properties enough love. So they say, you know, don't buy unregistered land or don't buy off the plan because it's a new estate and you're paying over. So, well, you know what, mate? I fucking beg to differ because I've made a lot of money buying an off the plan house and land. And today I want to talk more about purchasing off the plan house and land, which sort of relates to purchasing unregistered land anyway. It's the same logic, but I want to use myself as an example because I've actually purchased one of these. And I want to bring this up because there's a lot of people out there that it brings a lot of negativity to people that's looking to purchase an off the plan house and land and also unregistered land. Look, full disclosure, there's not a lot of people out there these days, or sorry, a lot of sellers, developers out there these days that sell house and land under the one contract. One of them is Connect Homes and one of them is Alum. Connect Home is a sister company of Edinburgh Homes, and Alum Home is probably one of the biggest developers in New South Wales. So why do I think, well, let's first touch about why I think buying unregistered land is actually worth it. Well, if you're in Sydney, if you look at North Kellyville, The Ponds, Stanhope Gardens, Schofields, Marsden Parks, Riverstone, or you look down south a bit in Sydney, call it Edmiston Park, Harrington Park, Oran Park, Oshawa, all these areas, they've all boomed, right? So when they were first released or first being developed, everyone was saying, oh, you know what, it's too expensive, it's overpriced. Why would someone pay so much per square meter? And do you know what? Some people can't even afford to buy there now, and they wish they got into it back then. And there's a few people out there, call it investors, always say, do you know what, buying new estates, buying unregistered land, you're paying a premium, you're paying overpriced stock, you know, it's not worth the value of the money. And let's use Marsden Park in Box Hill as an example. When it first got released back in around 2014, 2015, right? Dollar per square meter for an unregistered block of land was around $800 to $1,000 per square meter. And now it's 2024, you're lucky to even buy a block of land there for under $2,500 per square meter. And half the time, I don't even know why buyer's agent actually say buying unregistered land is a waste of money, it's overvalued, etc., etc., etc. Right? I don't even know why they even say that when they haven't even bought unregistered land themselves. They always say, oh no, you buy existing property. Well, do you know what? Maybe because they can't make money off selling unregistered land because they can't sell it. Because they can only make money off buying existing property for their customer. Well, do you know what? I don't give a flying fuck if you buyers agents out there are offended on what I say, because at the end of the day, I'm looking after my clients' needs and my clients' goals and what I think might be good for them based on my personal experiences. And I have to say it, I don't really do much business with buyers agents anyway, so some of you guys might be offended, some of you guys won't. If you guys are offended, don't give a shit. Alrighty, so the best way to put this as an example of why I think sometimes it's worth considering purchasing an off the plan house and land. When I keep on saying off the plan in this scenario, in this video, I actually mean purchasing an off the plan house and land, not an apartment. Okay, so just be aware of that. So I'm going to give you a quick example of what I purchased back in 2016 in October. So in 2016 October, I actually purchased an off-the-plan house and land in Calderwood Valley. So I signed the contract back in 2016 for an off-the-plan. It was in Calderwood Valley, which is near Albion Park down south a bit. And it was a 380 square meter block. It was a 3-bed, 2-bath, 1-garage house. And the cost was $560,000 at the time. I purchased the property of Connect Home, which is a sister company of Edenbray Homes. So what I've done was I put the 5% deposit and I didn't pay anything until it was settled, which is around end of 2018. So I purchased for $560,000. And at the end of 2018, which was just around the election period, I think the Labor government was going to abolish negative gearing. I think from a 10 to 12 month span, the property market went down by about 10%. It was a bit of a slow burn. I still remember those days. And it was ready for settlement. The valuation actually came back at $615,000. And it was ready for settlement. The valuation actually came back at $615,000. So I purchased for $560,000. It came back at $615,000 at a slow burning market, which went down about 10%. And the good thing for that growth is, do you know what? The property actually went up by about $55,000 in the 2 years at a down market. And I only had to pay 5% deposit. So 5% of $560,000, what you work out the maths, it was just under around $28,000. So which is not bad. And the good thing of that is because the valuation came back higher, which was $615,000, the bank actually allowed me to borrow 80% of $615,000, which what that means is there was less deposit out of my own pocket. I can borrow more, which is what I wanted. So my rent from that property was actually quite good. So when it was finished building, we put it back on the market for about a week. The rent went from $470 to $520 to $610 and now $630. So from 2018 and now 2024, the rent went from $470 all the way up to $630, and the purchase price on that was $560,000. So it's not a bad return. And a good thing was back around 2021 when COVID hit and the interest rates dropped significantly. And back in 2021, 2022, when COVID hit, the interest rate dropped, the fixed rates dropped. I actually fixed the rate for 3 years, interest only at 2.67%. That property was actually cash flow positive around $1,100 per month, which was not bad at all. I was loving life back then. But you know what? Times changed. Obviously, my interest rate's gone up by threefold. And now it's probably costing me around, I'll say $800 per month out of my own pocket before negative gearing or depreciation. And one thing, talk about depreciation. And one more thing is because it's an off the plan, brand new property, which a lot of people say, hey, do you know what? No, it's not worth it. You're paying a premium, it's a brand new property. The depreciation aspect actually helped me out significantly, right? And because it's also a brand new property, it's actually caused me less headaches. So from 2018 all the way up to right now, I've actually had no major issues in repairs. I actually had no major problems with the house. I think the biggest expense that I've had to pull out was, I think it was around $500 to fix the oven. So in 6 years, the maximum I've spent in fixing the house was about $500. And you know what? Because it was an investment, my depreciation claimables on that property was actually quite high for the first 5 years. So it actually reduced my taxable income quite a fair bit as well. And another thing why I beg to differ, buying unregistered land or off the plan in this scenario is actually beneficial. And remember, I purchased this property back in 2016 for $560,000. Okay, so in August 2024, I done 3 valuations. It was just online. All right, St. George, ANZ came back at $900,000. CBA came back at $979,000. Bank West came back at $960,000. And you know what? CoreLogic itself had a high confidence of $980,000. So the range went from $900 all the way up to $980,000. It is a big gap of around 10% difference, but you know what? It's actually not bad, right? It's a good guide. Even if I was used the middle of those ranges, it's still around the 940 mark, which is not bad considering I settled on the property in late 2018 and now it's mid 2024. If I use the valuation from ANZ and St. George, where it came back at 900, that's an increase of $340,000, which is around 60% increase. Hey, not bad for 6 years. Or if I want to spruik my services, which most people will probably, I wouldn't say who, but some people just use the high valuation to spruik and sell the services. Wink, wink. They'll probably use the valuation of $980,000. And in this case, the value of my property actually went up to $420,000, which is a 75% increase since 2018. And do you know what? If I was to take this valuation to the bank right now, and let's use CBA, for example, where it came back at 979, the bank will actually let me use up to 80% of the value of that property, draw that equity out, and for me to reinvest it into other things. Call it another property, stocks, whatever you want to call it. It's actually not bad. So now you know, buying off the plan is actually not a bad thing. Stop listening to all that bullshit out there, okay? When I talk to my clients about my properties, okay, I try to open up their minds a little bit more and say, you know what, you don't actually always have to buy existing properties, right? You can buy off the plan, let it sit in the next 2 years and get it until it's registered. Call it unregistered land in this scenario, okay? And just wait for the growth, right? You put the 5% down, you wait for the growth for the 2 years, and that's it. You know what I mean? Like, I'm going to give a quick example. One of my clients bought a block of land which was to live in, not investment, in North Kellyville. They purchased it for $920,000 from memory, and 12 months down the track, the valuation actually came back at 1.08. In 12 months, 1.08. Do you know what they did? All they had to put down was a 10% deposit on the land. That's all. No other loans, right? And when I talk about, you know, where this particular property is that I purchased off the plan in Calderwood back in 2016, some of my clients go to me, but why the hell there? You could invest everywhere. Why did you invest in Calderwood Valley down south, which nothing was happening? And it's a very good question. And during that time I didn't want a house and land package. I didn't want to have 2 contracts. I didn't want to pay for the construction costs. I just wanted the one contract to make my life easier. Okay, and I thought this was a very good product. You know, I had a look at it. It was in a good location. And you know what? I actually thought about if I would live here. And I saw myself living there. So it was top of the hill. It was lovely. It looked at the bottom of the valley. It was beautiful. So yeah, that's one reason. The second reason was I'd done a bit of research, you know, as an investor and everyone out there. The few things I looked at was what sort of infrastructure, amenities, or shops around the area. The first thing that I saw when I drove past the town was I saw a massive Woolies, which was only around 5-7 minutes away drive. And to be honest with you, when there's such a big anchor, when I mean anchor as in like a shop, like a Woolies, where it normally has a long-term lease, the area would not have a Woolies to accommodate 5, 10, 2,000 people. I would say for Woolies to put a big shop there, a brand new shop, they'll have to accommodate at least 5,000 people. So that was my first tick of approval. And I've also followed, and one thing that I've also said, if you're not a big researcher, is look at where the developers are going, you know? So for this particular scenario, I actually saw Alum Homes. So a lot of people don't know who Alum Homes is. He's probably one of the biggest developers out there that only sells house and land as one contract. You don't pay anything until settlement. So I knew them from a very long time ago. Not personally, but you know, I've heard of them. So let me tell you the areas they developed before it actually boomed. So they were first seen in North Kellyville, Box Hill, Schofields, The Ponds, Marsden Park, and all those areas actually boomed, right? And I was researching where else they went. They actually bought some land down South Coast. I've got exactly where it was. I think it's called Alumbi or something like that. And they were land banking it. So I thought, you know what? If these guys are land banking land there waiting for development, they know something that I don't know. Okay, so that's my second tick of approval. So the third thing that I looked at was actually affordability and what actually found value for money. And I actually found value for money based on the land, the house, and the rental yield, and the actual vacancy rates of the area. So those 3 things were actually the main drivers for me based on my minimum knowledge back then in 2016 when I was still a little kid. Okay, so I'll just follow those few fundamentals and also just follow my gut feeling, and that's why I invested. And you know what? It actually turned out quite well. And some people actually say to me, call them investors, right? They'll go to me, but Tony, you know, if you buy in a brand new estate, you're paying overs, you're paying a bit of a premium. You know, you probably find that if you buy an existing property, dollar per square meter is probably cheaper. And yes, I do agree. I do agree with that. You know, if you buy an existing area, a bit older, the house is a bit older, you know, dollar per square meter is probably cheaper. in comparison to if you buy a brand new area, unregistered, greenfield, new estate. Yes, of course, it's more expensive. And yes, you are paying premium, right? Because it's a new estate. If you look at Marsden Park as example, that used to be a farmland, right? And now properties around this over the $1.2, $1.3 million mark for a single story house. And let's use Marsden Park as an example. Before it was developed, it used to be a farmland. It was a farmer there. My dad knew him, all right? So, you know, and now properties around the area, it's at least $1.2, $1.3 million for a single story house. But if you look behind Marsden Park, you call it Wilmot, you call it Plumpton, you call it Wayland, which is more affordable. The house price around there is probably half the price, right? And what's the difference between them? Well, that area, Wilmot, Wayland, and all that Plumpton, is an older area. It's not developed. And why is there a big price difference? Well, if you look at Wilmot, okay, if you look at Wilmot, if you look at Wayland, Plumpton, it's still an old town, which not much has been going on around there. But if you look at Marsden Park, it's a brand new area. You know, it's a brand new estate. You got very beautiful ovals. You got beautiful new schools, new roads, a good community. And all that costs money. That's what the premium is for, okay? So yes, it is a premium, but you know what? You get something out of that premium. So guys, I wanted to put a lot of emphasis in this episode about buying off the plan or unregistered land, because you get a lot of people talking to you years out on the market to say, hey, do you know what? There's no value for money. It's not worth it. It's overpriced, right? But you know what? I just showed you a good example of, hey, it's actually worth it. You can actually make money from it. And you can see on proof on the valuations that I've just shown you in this video that I've actually made money from it. And my rental yield is actually quite good. So guys, I'm not saying purchasing off the plan. And what I mean off the plan, I mean purchasing a land and house together under the one contract, or purchasing a land and house package is the best thing. If it suits you, if you find value in it, then you go for it, okay? And I'm not against existing properties, because I still love existing properties, right? My next purchase will most likely be an existing property. I'm just saying you still find value in these sort of assets. And don't listen to everyone out there talk about, you know, oh, it's not worth it, you know, you don't find value, you're paying overpriced, because that's actually all bullshit, okay? And I've actually heard a lot of BAs, and when I mean BAs, I mean buyer's agents, actually deter you from buying stuff like that, which I find it quite sad in a way that they will say that, because obviously they can't sell it. You know, I do know buyer's agents out there. I talk to a lot of buyer's agents, but I don't work with any buyer's agents. So if any buyer's agents out there are offended, you know what? I'm not trying to offend you. You know, I'm just trying to lay out my message out there to tell a lot of people that off the plan is actually good with value at sometimes. All right. So that's it. So everyone, thanks for joining me in another episode of the Mortgage Chat, and I hope you see you next time.